G'day. Welcome to another economic update with Stefan Angelini on the 3rd of April 2023. And just like the cars in the F1 on Sunday around corner one, house prices go bang and have shot up in March. So it'd be good to see house prices getting up around the entire country in March 2023. Hopefully, this is the start of a comeback. What else are we going through today besides house prices increase? We're going to talk about rate cuts and when rate cuts are expected by the major economists around the world. We're going to talk about more builders that are going bust and the main two that have just been announced. And we're going to talk about oil prices and why you might see a spike in oil prices as a result of what OPEC have released over the last few days. Now, if you want to go and listen to the full episode of this to get an update on what I just talked about, head on over to the Real Wealth Podcast with Stefan Angelini. If you're staying on the line, thanks for listening. We appreciate your support. Just a little disclaimer, this is all just general information. Please don't consider it as personal advice. And if you want any personal advice, please go and consult your licensed financial planner. And I apologize for the sexy voice, but yes, I'm a little under the weather and it is what it is. So we'll just get through it. So let's talk about house prices and the speedy recovery that may be expected now. So as a CoreLogic has indicated that Sydney's house price has led the country's rises by jumping up 1.4% in March. Melbourne, Perth, and Brisbane both moved up 0.6%, 0.5%, and 0.1%. So good little increases there. So nationwide, home values were up by 0.6%, snapping an 11-month losing streak. Pretty good given the current environment. But so Tim Lawless, which is CoreLogic's research director, has said a combination of low stock, an extremely tight rental market, and additional demand from overseas migration has fueled the earlier than expected turnaround in prices in those capital cities. So look, low stock, we know there's no new builds coming on as well. Tight rental market, if you are a rental out there, you know how hard it is to find a rental. And overseas migration. So if you don't know, there's 450,000 new migrants expected to come into Australia this year. Next year will be 375,000, and then it'll go back to the average of about 250,000 new migrants. So low stock, people needing to rent, it's going to drive up home prices. So I guess the economics are starting to come to market, and so we'll just see what happens over the next few months. The house prices will be really interesting. Economists bet that the RBA will actually cut rates in February 2024. Sorry, Monday. I struggled to get that one out, but let's look at what they're actually saying. So the Australian Financial Review did a survey of 36 economists, and a majority of them have indicated they expect by February 2024 is when the cuts will start. A quarter of them, though, did say they predicted to happen at the end of this year. So if they happen at the end of 2023, it's going to be huge fueling for house prices. But then again, February 2024 is still a long way away. That's 10 months away. Let's hopefully it doesn't take that long. Let's look at builders going bust. So two major announcements in the last week. Porter Davis has collapsed, who is a big residential builder. And then Lloyd Group, who's more on the commercial side, has also gone under. So Porter Davis is one of Australia's largest builders. Lloyd Group is a pretty large, fairly reputable name amongst Victoria and New South Wales. Both of them have collapsed and gone into voluntary administration. Let's look at how big they were. So Porter Davis has more than 1,500 homes in progress in Victoria, 200 properties in Queensland, and there's another 779 customers who have signed contracts, but the building hasn't started yet. So what they're saying is that the rising input costs, the supply chain delays, labour shortages, and dropping demand has contributed to Porter Davis's collapse. And that's what liquidators have said. So it's costing more to get things. It's costing more to pay people because of labour shortages. You can't get people to complete projects. And it's taking a long time to actually get goods to build the houses. So the longer these take, the shorter the turnover is. So they're part of the reasons for Porter Davis's collapse. Let's look at Lloyd Group. So the company specialises in design and construction of building and infrastructure projects, mainly around Victoria, New South Wales, a lot of commercial sites. So they've got 59 projects under construction with 29 in Victoria and 30 in New South Wales. And they've got about 200 employees. So with that 200 employees, it's a pretty big hit. And we've got to see what happens to those projects that are currently under construction and who they're going to go to. There's still a lot of builders out there, a lot that are profitable. But it just seems that all these issues that were mentioned just before are starting to hit both ends of the market, both in the commercial and in the residential side. Quick update on oil. So OPEC has announced surprise oil cuts, so oil production cuts. So let me just explain what's happened. So Saudi Arabia and other OPEC plus oil producers on Sunday announced further oil output cuts of around 1.16 million barrels per day. Now, this is a bit of a surprise move and something the United States have called inadvisable. because they see the rising oil prices will create quite an inhibitor on people using it. But basically, oil prices last month fell to $70 a barrel, the lowest in 15 months, on a concern that a global banking crisis would hit demand. And then they've said, well, we want to try and keep the price of oil up, and therefore we're going to bring it back towards $80 a barrel, and therefore we're going to cut our production. So it's a pretty big announcement. Hopefully it doesn't flow through to us at the oil pump because there's enough issue around inflation. But that's a little economic wrap today. Hopefully I've kept you up with a few things. Go out, have a great day. Hopefully we'll get better and deal with the hangover from the F1 really quickly. See you later.